Hey, what's going on, everybody? We're going to be doing here a series of videos, basically starting from introduction all the way through day trading and all that good stuff. First thing we're going to do is we're going to take a look at the MEasuredmove / trading view and all that good stuff. Be explaining exactly in general what those things are and how we're going to go about step-by-step process. So the first thing we're going to do is go to tradingview.com. So we're going to type in tradingview.com. It should bring up a website that looks something very similar like this. Now, this is a very interesting website, is because for a website that's for free, now to get all the little indicator packages and stuff, you have to pay a monthly subscription, but overall in general, it isn't that bad. This is what I used to use just in general when I wanted free services, and it has access to every single market that you can think of just in general. So let's go to tradingview.com. We're going to come to this search tab right here. Now, depending on what market we want to look up, for example, stocks, we hit stocks, and then we come up here and we type in the short abbreviation of the particular stock we want to look at. For example, Apple. You type in APPL and you get the stock Apple under the NASDAQ and hit right here, launch chart. Now, what's a very interesting thing about this Apple chart is we have what's basically called candlesticks. And it's very self-explanatory. If you see a green candle, that means price went up, people were buying it. And you see a red candle, that means price fell down and people were selling. Now, if you come up next to the AAPL, you have what this is called a time stamp or time stab, whatever, tab. And you can actually look at the price action or how price moved in a 1 hour, 2 hour, 3, 4 hour, all the way to a day or a week or a month. Now that what happens is when you click on, for example, the day or the week, this will actually make you or allow you to see the market in general over the weekly time frame or a larger picture, easier terms. So basically this entire green candle right here that you see represents a week's worth of price movement in the upward direction. So if we count 1, 2, 3, 4, 5, you'll see price moved up pretty much 5 weeks straight through. Let me check this thing real quick. Now, what's really awesome about this charting platform, it allows you to use several different tools to actually help you draw trends, uptrends, and downtrends in order to organize the market in a way you could find suitable and easier to see. Now, there's one thing in particular I'm going to share with you guys. This is actually very profitable over the larger time frames, for example, the daily, the weekly, and the monthly, but not necessarily coming all the way down to the 5-minute time frame. 5-minute time frame has a lot of noise, a lot of movements in short terms, but if you go to the larger time frame, it will actually cut out a lot of the noise and allow you to see just in general overall which way the market's moving. As you can clearly see, we've been in a constant uptrend since the last 10 years, and we have had parabolic uptrends the last 3 years as far as the Apple stock is concerned. Now, the one thing I want to talk about is rotation and the MEasuredmove itself. Now, rotation is simply a 3-point move. When price moves up, then it moves back down, and then it moves higher. This is what we call one rotation. We're basically looking for a higher high, higher low, higher high. Now, a lot of people like to think of this as also as an ABC movement or a 1, 2, 3 per se. Whichever way you want to look at it, it's what we call a rotation. Now, when you're actually looking at the market, we have something called the MEasuredmove. Now, this is actually created by a very smart, successful trader named Dave Halsey. He has basically an entire methodology behind this MEasuredmove, but basically what we can see is on any time frame, we have a 3-point move, A, B, C, and what you do is you measure the first 2 moves. So obviously you have 1, 2, and 3. And what normally happens is when the market starts to pull back, there's a tendency for the B wave to retrace to the 50% or the 61%. about as far as a retracement. And what happens is when it reaches this 50% or 61% pullback, there's algorithms actually loading up massive buy orders in this region. And that's what you're going to see when we go back through this chart on different time frames, that you'll find it periodically that the market is actually being bought in these areas, and it just has a massive parabolic move up. So just kind of see in a better, closer look. So you can clearly see this is the 50%, 0.5, and then you have the 0.61. A lot of the times it will actually move off the 618 or the 61.8% retracement level. And we usually like to call that the golden zone, or the golden zone trade, or the golden pocket trade. So right now we're looking at Apple on a weekly time frame. And I'm going to kind of go through just real quick, showing you guys, even on a larger term or longer term time frame, that this thing moves very well. So it's not very hard to see the low and the high point of a market. For example, you can see here. Trust me, this is a weekly time frame, so this is several years as far as price movement. But this, you clearly see, this is a high, this is a low, we have another move up. So when we take the low, we move it all the way up to this very high point right here. Clearly see a high, low, high, and a low. You clearly see the market right here came all the way down. It tapped it a couple times, it tapped it twice, but generally it came down to the 61% and it just completely launched off. And the market just continued to move higher, higher, and higher. Now this is also what we call a rotation on the larger term. And just in general, you can see the next dominant larger swing over the years, from this low to this high. You can see the market come all the way back down to the 50%, touched it twice, and then just rallied completely high, up again. Well, let's do it again. It's from the same low point to the same high. Market bounced off the 50 several times and took off again, and a couple more times. From this low to this high. Honestly, this one's probably one of my favorite ones. It doesn't really get any perfect than this. So between this low, high, low, you clearly see we hit the golden zone, the 618%, and only did a few dollars into it, then it just rallied up high. Now, a lot of people say, well, what's going to happen if I can't get in on this perfect move here? Well, guess what? Within a larger degree, you have smaller degree movements. So this is one whole move here. Well, if you miss this here, you get on the next one. We call these micro moves. Actually, this is just gets really good as it gets right here. So you got to move up, pull back, hit the 618 to the perfect almost. Launched up again. Well, what if I miss that one? Well, shit, it does it again. Several weeks later. It's the 15, rallies right up again. So, I mean, it just does this over and over and over. And if you just measure from this low to the high, the larger degree, you have a perfect touch right there on the 618. I mean, you just can't make this up. I mean, it is what it is. Now, the very interesting thing is, well, how low can you see this price action? Well, believe it or not, banks use this algorithm on every single time frame. So if we come down to the 15-minute and look at today's price action, probably eventually find something. So you clearly see this is today's, or the price action lasts several days, but from this low to this high on a 15-minute chart. Now, remember, each one of these prices are relevant to 15 minutes worth of data. So you have a low, high, low, and we hit the 618, and then we just rallied right off for the rest of the day until the market closed. So that was today's price action. You have a 1, 2, and 3. So can't really make this up. You can see it on the larger time frames and the smaller time frames. Now, You could trade this on the smaller time frames, but your high probability rate isn't very accurate and isn't very good. So much easier to do this on the daily, weekly, or the monthly time frame. The reason is because it takes all the noise out of it and allows you to basically focus on the smaller time frames. So for example, when you look at a several weeks or even a month, this is just one giant candle. So if we look here on 1 month, this entire move up is 2 candles. Well, you're like, well, I missed it. Well, drop down the daily time frame. See what we can get. Well, look at this. It's clear as day. I mean, I'm just eyeing this. I could see measured moves all over the place. See our original one right here. 618 rallied off again. And you just, I can see 2 perfect ones here back to back on the daily. Perfect touch to the 50 right there. And the second one looks like it was perfect too. Not quite, but it dipped into the 50 and then just rallied up. So same thing here. You can clearly see his day right here. Hit the 50. It actually touched the 50 twice, but either way, off the original push up, that's several percent, like 3 to 4% move right there. You would have made money. So, you know, that's the general theme. Now, people say, what if the market reverses? Well, look at the market over the larger term. What do you see? The market just moves up. So, you know, if the market pulls back heavily, well, you might be in the trade for a month or two. That's what it is. You never sell at a loss. That's just stupid. I mean, just look at this thing. This thing is just parabolic. Now, the question is, why do we wait for the retracement? Well, if you hold into the retracement instead of taking profit at the top side, you're missing potential 50% gains because this thing pulls back 50%. If you buy here, hold all the way down here and come back here, you didn't gain anything. You only made money as the market pulls back. But then look again, market comes all the way back down to the same area you bought several months later. So it's so much easier just to play the pullbacks with using the Fibonacci tool, buying at the 50% off each longer term rotation. 618, sell somewhere around the high. Do it again, another 618, 2 618s back to back off of monthly rotations. See that big M, that means a month. So 1 2 3, 1 2 3. I mean, you just can't make it up. And each one of these rotations aren't to the downside, aren't very long. You're talking 1 2 3 4, 1 2, 1 2, 1 2. So you spend a lot less time correcting, and you spend exponential amount of longer times to the moving to the upside. So the nature of the game is just identifying areas and pullbacks. But this is one accurate strategy, algorithm that's in the market that repeats itself all the time. Does it do it perfectly? No. Sometimes it'll go back to its original buying point and then retest and then go again. But that's the nature of the business. But I guarantee if you trade this on a daily, a weekly, a monthly time frame with any large amount of money, you will be extremely profitable over the long term of your trading career. Yeah. So that's pretty much it. We'll be covering more stuff in the next couple days or maybe a couple weeks. But yeah, I appreciate you watching. Thank you.